Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy investment advisor Ross Clark will have the latest lowdown from the senior markets. Former National Revenue Minister and Raymond James investment advisor Garth Turner believes the Trudeau government missed several opportunities in its budget. He comments on whether Trudeau and Trump will make it to a second term. Turner also tells us who he likes in the federal Tory leadership race. Author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash, Hilliard MacBeth, wonders if the government can ever get to the bottom of who is causing the real estate bubble in Toronto and who caused the real estate bubble in Vancouver. Plus, we'll have a company showcase update with Jim Pettit, the president and CEO of Aben Resources. We'll talk to Ross Clark right after this.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
We're chatting with Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Always a pleasure, Jim.
Ross, how are the gold and silver markets holding up with Trump holding down the White House and Mr. Trudeau running Parliament Hill?
Well, I think a little bit of anxiety regarding the situation in the U.S. They're having trouble getting this bill through into Congress to even get a vote. And with that type of anxiety, we saw a week where the market took a little bit of a drop, and precious metals clearly got the benefit out of it. It was after a good week the previous week. I think we were up $18 or $20 in gold a week ago, and up another 20 this week. So that's putting us back towards the February highs again. You know, we got, I think, 1265-ish on the first rally out of December, backed off to about just around 1200, and then now we're back at 1247. We're of the mindset here that we've put in a significant low in the gold and silver markets, and if we can close back through the highs of the year, up through that 1265-ish area, which is pretty much the design of the model that we have here, then gold should hold very well. We would look for it not to give back much more than $20 or $25 on any pullback. And silver might have a little bit more volatility to it, but it's clearly got life as well. It was up about 35 cents this week. The disappointing part of this is that because we've had a soft equity market for the last 3 weeks, the mining stocks are really having a hard time participating in this rally. They pretty much a flat to down week for most of those. So if it keeps on that vein as the precious metals move up into a higher high, that would be the type of thing that would set up for, say, the minor correction back into the 1240s maybe on the gold price.
Crude oil prices on a slow slide, though you'd never know it if you took a look at the gasoline pump prices in Vancouver. How long do you think this slide in oil will continue, considering that OPEC is talking about another production freeze?
Well, the production freezes, the original one was only going to be for the short period, and, they were very smart here in that they're setting short periods for each of these, windows, and therefore, as they get to them, they get a chance to make more headlines again. But effectively, the price after, a 13-month rally, we're having a good correction down. We started to see some good cleanouts in the commitment of traders numbers. The number of speculators who were long is starting to be forced out of the market. Those numbers still aren't down to what we would consider to be even neutral, let alone bullish. So crude oil prices around 47 right now. I clearly think that you need something into the mid to low 40s before you can be looking for any reasonable stability. On the upside, $49.50 to $50 looks like a pretty good lid for now. but we'll see how that goes. The other market that had very high commitment of traders numbers here the last month or so was the copper market. It's sold off similar to crude. It's holding, though, just about the 265-ish range. If it breaks 260, then you'd expect that market to also come under a fair amount of pressure. And so if you're having these commodities ease off, makes you think about the interest rate side of the equation. And the Treasury bonds, the Treasury notes, have put in what appears to be a pretty reasonable bottom, double bottoming after the last FOMC announcement on when the Fed raised interest rates for the third time, but that's small incremental amount again.
Do you expect the Fed to hike rates any more this year?
I don't know what they're going to do. However, the street still thinks that there are 3 hikes ahead, based upon their outlook for the economy. As I look at it here, the bond market is saying that there isn't anything that's imminent right now. The bonds are already rallying off the bottom, and the work that we've done there would indicate that there's maybe another 5 or 6 points left in this bond rally. If it peters out there and starts to roll over, then I think we could be talking about, the potential for another rate hike. But really, the Fed follows what is happening in the economy, what's happening in the open market more than anything. And so my preference is to not second guess the Fed. It's to try and analyze what we're seeing in terms of trends and patterns in these various markets.
Ross, thank you so much for helping us out on This Week in Money.
Always nice to be with you, Jim.
My guest has been Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. If you have any questions for Ross, you can email him at ross.clark@cibc.ca. Coming up, Garth Turner next on This Week in Money.
Always consult your investment professional before making any investment decision.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN/AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Garth Turner. He's a former National Revenue Minister. He's also now an investment advisor with Raymond James. He has the hugely popular blog greaterfool.ca. He's speaking to us from the center of the universe, Toronto. Garth, welcome back to This Week in Money.
Nice to be with you, Jim. Thanks.
Garth, Finance Minister Bill Morneau delivered the second Trudeau government budget this week. If you were in his brand new shoes, what would you do in the budget?
Well, I think it was an opportunity for the Trudeau Liberals to do whatever dirty work they needed to do prior to the next election. And I think the dirtiest work that has to be done is to try and get some of the fiscal balance back into the national picture. I'm very concerned that what was supposed to be a $10 billion temporary deficit now is looking more like a $30 billion almost permanent shortfall. This is just, irresponsible. I know Harper ran up a big deficit and debt, but he also went through the credit crisis of 2008, 2009. We don't have that now. We're actually in a period of somewhat restorative growth. So I think for the government to be spending so massively beyond its means is unfortunate. And I think this would have been the budget to say, listen, we're not trying to get elected right now. We're not going to give out a whole bunch more stuff. We need to get this sucker under control. And they did not do it.
Is Rona Ambrose right when she says there is no plan to reduce the deficit?
I don't think so. No, I don't. I mean, the only plan, as you remember during the campaign when Mr. Trudeau was asked about it was, well, the government, the deficit will take care of itself. Well, it's just not going to happen unless we get 3, 4, 5% GDP growth, and that's not in the cards right now. We're barely growing at all. A year ago this time we were in recession, so we were negative growth. So no, I don't see a plan there. I don't think that the government actually cares about the deficit numbers going into the next campaign. And I'm not sure that their voter base does either. That's the scary part, Jim.
How long would it take us to get back to a balanced budget at the current rate of spending?
We won't. It'll take forever. The parliamentary budget officer is, taking a stab at this and taking a look at the economic numbers the government came out with last fall, which are pretty close to the ones we saw this week, and concluded that, we're well into the 2030s before we actually start getting close to a balanced budget. I mean, that's a long time. That's going to be 10, 15, 20 years of structural deficits in place. That is going to catapult this national debt that we've got. Now it's going to be around $700 billion very shortly. So it's going to take it a lot higher. And I know a lot of young people supported Trudeau, and he really sucked in the millennial and a lot of Gen X voters for various reasons. But these are the same people who down the road, when they're in sort of their peak income earning years, are certainly going to be hit with the bill for what's happening now. So it is kind of irresponsible. And we do have an aging population, all these old boomers like me hanging around too, getting expensive in terms of OAS and CPP. And, Mr. Trudeau, one thing he's done is rolled back the OAS, the old age supplement, from 67 years of age, where Harper pushed it up back to 65. That's going to cost $11 billion a year, just that one change. So, the Piper's going to be playing a pretty mean tune there down the road, and it's going to be a lot of today's 20, 25, 30-year-olds who are going to be cursing the fact that they ever voted for this particular spending regime.
Was this a cautious budget in response to the Trump presidency? And what would the Trudeau government's budget would have looked like if Hillary was president?
Yeah, good point. There's Trump fingerprints all over this budget. And what I think the Trudeau government really feared the most was getting too offside with what Trump might do. So Trump's a pro-business guy. He's got a pro-business cabinet. He's got pro-business policies, and he's been catnip to the stock market. So we've seen a 10% surge in stock values since the guy was elected in November. That's huge. And part of the expectation was that Trump is going to cut taxes, cut corporate taxes, cut personal taxes. And that, obviously, corporate tax cuts going to fall right to the bottom line and help corporations. Stock market loves it. Now, the problem with Ottawa is that if they start messing around with taxation on small corporations, which they wanted to do, or changing capital gains taxes, or the treatment of dividends, which they also wanted to do, we would be very out of step with what the Trump administration will come up with. And therefore, we'd see a river of capital flowing into the United States out of Canada. Would have been bad for the country, bad for the economy, bad for the dollar. So they couldn't do that. Hands were tied, and that's why we had a budget that basically had no tax measures in it whatsoever. So if Hillary had been elected, I think you'd see a different kind of administration in the U.S., much more like that we have in Canada right now, more classic liberalism, which is tax and spend, and that is provide more social spending and provide more deficit financing to support it. I think that's what the Clinton administration would have done, and that's what the Trudeau administration is doing. So I think we would have had a tougher budget. I think we would have had more taxes on the wealthy. I think the capital gains tax would have changed. Stock option treatment would have changed. a tax on retained earning in small corporations. I think all of those things would have happened. So maybe those of us who are investors, we should be happy we got this crazy guy as president of the United States.
Would Canada benefit more from globalism or nationalism?
Yeah, no doubt. One answer there, pretty clear and simple. That's globalism. We're a small country, 30-odd million people in this big, giant place. That's not a very big population base. We have a standard of living where it is today because we are a trading nation. There is no way that we had border tariffs and walls around our borders that we would have the standard of living we do now. So free trade with the United States, NAFTA, our trade agreements around the world, they have allowed our exports to flow in a way that they never would have flowed otherwise. So nationalism may work for the United States. They have a much more dense country. They have 10 times the population. They've got a much more developed education-based economy in the extent of technological development and innovation. And they can afford to have a few walls, a few tariffs, a few barriers, and have more of an internal job market. Canada can't. So, Jim, there's no question about it. Anybody who thinks we can sit around and build walls in Canada better get used to, cutting firewood and harvesting maple syrup, because we're going in that direction again.
Was Trudeau smart to send all these ambassadors like Brian Mulroney into the States to chat up state governors and so on to remind them how big of a trading partner Canada is?
Yeah, I think for sure. It was probably a good strategy, and I think he's going to have to do more of it. Maybe we ought to get Celine Dion and Justin Bieber in there. We'd be fine.
Well, maybe Celine. I don't know about Justin. Are Trump and Trudeau likely to last 2 terms?
Yikes. Well, I think Trudeau is. Just given the population, the way the population split on the vote last time. I think so. The Conservatives pretty much called out all of their vote, and they didn't win. The Liberals called on a whole bunch of new voters, and they did win. And I think that he's got a pretty good potential to be reelected if he's able to get the economy turned around somewhat in the next couple of years. But that may not happen. I don't know. It depends on who the new leader of the Conservative Party is. Older voters tend to be conservative, and older voters tend to vote more often. So maybe an infatuation with Justin Trudeau because he's hot and his wife's hot and he's got tats and all this kind of stuff. Maybe that infatuation will wear off and the voter turnout will go down for the younger voters. I just don't know. Trump's a whole other thing. Trump, I don't know what is going to happen there. I have no idea. But the guy who is currently president of the United States is going to have to turn into a different individual, or he's not going to survive. There may be an impeachment. It's possible. He may do or say some stupid things that actually get him in immensely hot water. Or the Democrats who get their house in order, and Hillary actually got more votes in the last election than Trump did. So there's a huge Democratic voter base out there. I think Trump's going to have a much harder time winning a second term.
Who do you like in the Conservative leadership race?
It's hard to say. I'm not enthralled with anybody right now. I sure hope it's not Kevin O'Leary. I know Kevin. I'm not that enamored with his business track record. I think he's trying to be a Trump surrogate in Canada, and I don't think we need that. I hope it's not Kelly Leach. I think she's a xenophobe. And again, she's trying to be a Trump clone in Canada. I don't think that's good news. Michael Chong is a nice guy. I know him too. Very reasonable person, but I don't think he's got the profile to win. So it may come down to Maxime Bernier. He is a smart guy. He's got a good business background. He's bilingual. He's got a good base, and I think he might be the rational choice.
Of course, when it comes to politics, rationality doesn't always work out.
It certainly doesn't. Yeah, just look south, what we were just talking about.
You're a former National Revenue Minister. The Trudeau government's increasing the number of auditors in the CRA to go after high net worth individuals. Why are they doing this, and what are they looking for?
Well, as part of the sweep for tax money, they're pretty desperate to get whatever they can right now. And, high net worth people are a pretty juicy target to go after. And they've got this whole agenda now that, we're for the middle class. We love the middle class. We embrace the middle class, whatever that is. So it's pretty easy to set it up us versus them environment, and that's what we're in now. So, I think you have to realize 1%ers in Canada, people who make over $225,000 roughly, there are only 286,000 of them. I mean, that's it. It's not that many. So, and we've already got a 54% tax bracket now for the highest income earners, which is pretty punishing. So I'm not sure there's a lot more to get, and that's why I thought that they may go ahead with the capital gains tax change or the dividend tax credit change that was being rumored in the budget. I'm not sure that audits and CRA auditors are going to get a lot more. They may be more successful out of some corporations, but I think it's probably trying to get blood from a stone right now.
We'll have more with Garth Turner next on This Week in Money.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with former National Revenue Minister Garth Turner. He's an investment advisor at Raymond James. Garth, the Trudeau government says they're targeting tax evasion and tax avoidance. Tax evasion is illegal. What about tax avoidance?
Yeah, well, tax avoidance is kind of part of the business that I'm in. I'm a financial advisor. I look after people right across Canada, and people who give me money to put into a portfolio to invest for them are also looking for tax advice. And when I give them tax advice, it's tax avoidance advice. Now, there's a big difference between tax evasion and tax avoidance. Evasion is illegal. Tax avoidance is not. Tax evasion is when you owe money and you find ways of not owing it, or not paying it. Tax avoidance is basically never setting yourself up so you have that tax bill. So it may be income splitting with your spouse. It might be borrowing money and having a tax deductible investment portfolio. It may just be making sure you're topping up your TFSA or your RSP. There are lots of ways that Canadians can avoid taxation by doing many of these measures. So there's nothing wrong with that. And actually, as the government gets more aggressive about making sure that there is a tax compliance, then guys like me get more popular because people are always looking for ways of avoiding taxation. And I think bringing in that new tax bracket in the last budget on people making roughly $222,000 or more, bringing in that extra high tax bracket, I think is probably done more for that financial advisory business than anything, because people now are just, feeling really overtaxed and are looking for ways that they might be able to minimize that exposure. Now, I must remind people, Jim, that the government, the CRA, always has the final say. There is something called GAP, the General Anti-Avoidance Rule, GAR, actually General Anti-Avoidance Rule. And GAR is sort of a blanket provision that allows the CRA to really go after anybody that they think is overly avoiding taxation. So always get good advice. Always talk to an accountant or an advisor before you start doing cute things to diminish your tax bill, because the CRA has a tremendous power, and they've got this big stick that they can really come and whack you with. So make sure you're careful about it, especially today.
The Trudeau Foundation has been in the news lately. Is there likely to be an investigation into foreign donations and access?
Nope, I don't think so. We've got a different system of government in Canada than they do in the United States. There you can get a congressional hearing into, activities by any public figure, including the president. You're not going to see that in Canada because we don't have committees that are independent from Parliament. In name, they're independent. In actual fact, they're not. Parliamentary parties are made up of membership of members of Parliament according to their party affiliation. So when you have a majority government, you've got a majority number of Liberals in the House of Commons. Every single committee is going to have a majority of Liberals on it. And so if they follow the party line, they don't want to have an investigation into Mr. Trudeau for obvious purposes. It ain't going to happen. So in this system, Jim, nope, no chance.
Will the Trudeau government ever legalize marijuana and benefit from the tax revenue?
Yeah. My gut feeling says no, at least it's not going to happen in this term. So it'll be another campaign promise that's broken. I don't know if it's ever going to happen, truly. It's quite out of step with the United States. They hold a lot of sway over us. We have a bunch of, in the eyes of Americans, we got a nation of potheads running around in Canada, slipping here and there over the border with our evil little packages of weed in the pocket. It becomes problematic. It's not something the American administration wants. They've got a serious drug problem. We do too, but they've got an even more serious drug problem. And I just don't think that there's going to be the appetite to really allow Canada to go with a federal regulation allowing the wholesale sale of marijuana. So I kind of doubt it's ever going to happen, but, maybe I'm wrong. I'm not an expert in this field, that's for sure.
Well, I noticed there was no mention of it in the budget.
No, I'm not sure you're going to hear about it again, actually. I know they've got a minister of pot, but, you don't hear much these days. They got a committee looking at it. They got every cop in Canada telling them don't do it. Every minister of health says don't do it. Every social agency says don't do it. So I'm just not sure this is ever going to happen.
What do you see ahead for the various real estate markets in Canada?
Well, we got a pretty interesting situation right now. Toronto's out of control, and that's a fairly recent development. That's only now in the past number of months that we've really gotten out of control. And that's taken most of southern Ontario out of control too. So right from the Niagara Peninsula, right through all southern Ontario. The lower mainland experienced the same. Vancouver got out of control. All of a sudden we saw, house prices going up everywhere from, Whistler to Hope, down to White Rock. So the lower mainland and all around, got infected. But what's happening right now across the country is kind of odd. We've got declining markets. The prairies are declining right now. Calgary's still pretty sick. Halifax is going down. Montreal is going nowhere. Toronto's hot. Vancouver's an anomaly because sales are way down, but prices have firmed up again. But the market is definitely in distress. So it's a really mixed bag, Jim, right now. There's no consistency across the country at all. And more than ever, we have this really this adage that all real estate is local. You've never seen it more than you're seeing it now. I think we are going to see some attention paid to Toronto by the Ontario government, probably a speculation tax or foreign buyers tax, but more probably speculation because I think that's the real danger right now.
Is real estate the elephant in the room for most governments in Canada, and should the various governments do something or do nothing?
Some governments are going to have to act. I think Toronto is out of control. 27% year-over-year gains now, and And Toronto's a big market. I mean, Vancouver's big too, but Toronto's 6 million people. Like, that is huge. It's a huge market. So if that market goes into a free fall, if it does blow up, it is going to affect real estate markets in every single corner of Canada. It's that big and influential. So therefore, I think the government of Ontario is going to have to do something to rein it in. We're not going to see that happening in Alberta or Manitoba or Saskatchewan or Quebec or any of the maritime provinces. It's not going to happen. Maybe in BC, but we've already had a lot of action in BC. And even now, the foreign buyer tax is starting to be scaled back a little bit because it's had this draconian influence on dampening sales. So I think right now we're kind of restricted to action in Ontario, Jim. I don't think anyone else should expect action to take place.
What does so-called low inventory in real estate markets signify?
It signifies trouble, an unbalanced, unhealthy, out-of-whack market. Why do inventories go down when prices go up? Well, it doesn't make sense, does it? I mean, when prices go up, why don't people sell for big bucks? Well, two reasons. Prices go up. Number one, people feel greedy. Oh man, my house is making more money than I am. Why would I sell this thing? It's going to go to the moon. So you get that sort of wealth effect happening and listings start to diminish. But the real reason is when prices get totally out of whack, people say, well, if I sell, where am I going to buy? And the real question to ask yourself is, would you buy your own house for what it would sell today? And I would wager that 90% of the people in Vancouver and Toronto right now would answer that question as no bloody way. There's no way I would pay $1.6 million for the house I'm living in now. There's no way. Not only is it not worth it, I couldn't afford it. So people cannot afford to move when prices become unhealthy and frothy and speculative. And it gets worse because, you've got a commission to pay when you sell a home. And in a market like Toronto, there's a double land transfer tax. You want to buy a house for $1.5 million in Toronto, you have to shell out $60,000 in tax just to get the deed. It doesn't do anything. It's just a tax. So you pay commission on $1 million house and buy one for $1.5 million. You've now spent $120,000 to do nothing except move. So that's the reason why. And it really is one of those factors that tells us that a market is overvalued, that it's frothy, that it's bubbly, and it has detached from economic fundamentals.
Have the profitable house flipping days in Canada ended?
Oh yeah, they're done. I mean, maybe in, some secondary markets where you can buy a house and rent it for positive cash flow. But you're sure as hell not going to be able to do that in Toronto or Vancouver. You cannot buy a house at today's levels, rent it out, and be cash flow positive. It is not going to happen. And therefore, in fact, I'm just writing a blog right now about a company in Toronto that did an analysis of this and found out that 95% of all of the amateur landlords in Toronto are losing money right now. 95%. The only way they're ever going to make money is if the market continues to be hot and bubbles higher. But that is not going to happen. So we're, in a period of time right now where it's getting very difficult to buy a home, flip it, and make money. And yet, Jim, and I'm writing about this in my blog tonight, just a few days ago, and yet in Toronto last Saturday we had 15,000 people show up at a Tony Robbins event for him, who knows nothing about local real estate, to tell people how to buy houses and flip them. If you ever need an indication that a market is about to blow up, 15,000 people paying $50 to $150 a seat to listen to that garbage tells you all you need to know.
Could a sharp drop in the U.S. dollar cause the U.S. Fed to raise rates higher and faster?
Well, I think they're going to raise rates anyway. I don't think they care that much about the American dollar. It's gone down a bit lately on expectation that Trump's agenda is going to take a lot longer to bring to fruition than people thought. So that's hurt the dollar and hurt the stock market a bit. But I don't think the Fed really cares that much. If the American dollar goes down, that's cool because it helps U.S. exports. So not a bad thing. I think the Fed is going to raise interest rates based solely on their expectation of GDP growth and on inflation. And if Trump's agenda does come to fruition, we are going to see a wage price spiral. We're going to see inflation in the U.S., and we are going to see higher interest rates. They went up, of course, March 15th, went up in December. That's 2 hikes in 4 months. And we're probably going to see at least 2 more, maybe 3 in 2017. So the days of ultra cheap money are over. And this is going to spill into Canada as well.
There's speculation the stock markets might take a dump beginning sometime this year. Do you think that's likely?
I think they're going to correct. Yeah, I think that's entirely likely. Like I said, it went up 10% since November. That is extraordinary. That is, unprecedented in that period of time after an election. So we're due for one. We haven't had a good old-fashioned 10% correction in one heck of a long time now, so we're due for it. And I don't think anyone should be surprised by it or upset by it, and it's probably a buying opportunity. Because if the Trump agenda, again, comes to pass, we are going to see a lot more gains down the road. Stocks are a little bit pricey right now, maybe 20% overvalued compared to historic norms. That's a reasonable amount. It's not, nosebleed territory. It's nothing to, go into cash and start quivering about, but it is expensive. So, but I think there's more to come. And if Trump drops corporate income taxes, stocks are expensive based on a PE ratio, price to earnings. Well, the price means the price of the stock. The earnings means what companies make. If Trump drops corporate taxes, then you're going to see earnings go up because companies pay less tax, more money falls to the bottom line, they make more profits, earnings go up. All of a sudden, stocks don't look expensive anymore. They look relatively cheap because you got that price-earnings ratio.
What sectors do you like now in the financial markets?
What sectors? Well, I think in Canada, you certainly want to have good exposure to the banks. These guys are money machines, and right now I think we're going to continue to see high profitability there. So other than that, I'm an advocate of index investing, though. I don't like picking sectors. I think you should buy the market, the whole market, get the diversification you want, and that'll serve you well.
In an uncertain world, what are your thoughts on gold and silver?
Forget it. Yep. Make good doorstops. In the absence of serious inflation or in risk of currency devaluation, there's no reason to hold gold or silver.
Are cryptocurrencies here to stay, and do they provide an avenue for money laundering?
Well, the latter is certainly true. Yeah, they do provide that. I don't think they're ever going to become mainstream. They're never going to be regulated. They're always going to be volatile. There's no central bank that is helping to control the supply and therefore to keep these wild fluctuations under control. I know that's exactly what cryptocurrency advocates love, the fact there's no nationality and no central banks pulling the strings. But by the same token, they're far too volatile to be used in everyday commerce, and they're far too volatile to put in people's portfolios. So now I don't think in the current form that you want to have those in your portfolio at all.
What's going on at greaterfool.ca?
Exciting times, of course. Well, we look at a lot of things on there. It's talk a lot about real estate, the kind of things we talked about in this call, Jim. Taxation policy, the budget was a big deal before it came down. I think right now people are looking for investment guidance in what seems like a weird world. You've got Brexit happening in Europe and all these elections coming up there, and is Europe going to fly apart? What's going to happen in North Korea with that crazy guy? And then you've got Trump in the White House. So there's a lot of political uncertainty in the world right now, and I think people are looking at how that's going to how they should manage their portfolios to survive that. So we spend a lot of time talking about that stuff.
Garth, thank you so much for being on This Week in Money.
My pleasure, Jim. Thank you.
My guest has been Garth Turner, former National Revenue Minister and Investment Advisor at Raymond James. Check out his very popular blog, greaterfool.ca. Coming up, Hilliard MacBeth, next on This Week in Money.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Hilliard MacBeth. He's the author of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Hello, Jim.
Bill Morneau, the Canadian finance minister, tabled his budget a few days ago. Was this a budget that was friendly for business?
You know, it didn't really do very much. It had a very large deficit, $28.5 billion, which was, I think, chosen because it doesn't put the government any deeper into debt as a percentage of GDP. It's basically they're very proud of the 31% debt to GDP number, and it turns out that's exactly the amount of deficit that keeps them on that track, assuming that the GDP grows by around 2% a year, which might be too optimistic, but that's roughly what they've chosen. So I think the deficit will be a bit of a shock to a lot of business people. It's I think it was running at 22 or 23, and now it's up to 28.5. But the federal government, in their defense, can say that as a percentage of GDP, it's the lowest in the G7, possibly even in the G20, but for sure in the G7. So now, that, of course, that doesn't count provincial government debts, but that's not what Bill Morneau is responsible for. So, but it didn't do a whole lot. Like, there was a lot of talk about some punitive measures on capital gains tax and stuff, but none of that happened. But there is a hint, though, that they are studying it. So I don't think the business community will relax entirely, because he mentioned that in the fall they'll do an update, and there's several things to do with private corporations and taxation that are being looked at. They talk about it in the budget as an area that they're investigating, but they didn't announce anything new on that topic anyway.
Is the whole idea of having a fall update to react to whatever kind of budget Donald Trump presents?
Exactly. So you put your finger right on it. It's an amazingly thin budget that they came out in Canada recently, and I think it's primarily because they want to see what happens with the U.S. tax regime, especially with the what they call the border-adjusted tax, or the destination-based cash flow tax, which I know you and I talked about a few weeks ago. It's a very big deal for Canada, that tax, if they were to bring it in. Recently they tried to get the healthcare amendment passed to repeal Obamacare, and it's just coming out. I don't know if it'll be passed by the time we're on the air with this interview, but the evidence seems to be piling up that the new administration in the United States is having real trouble getting their agenda passed. So it may be that the comprehensive tax reform that was touted will never come to pass. But I don't think the Liberal government in Ottawa, in Canada, wants to take a chance. So they really have kept all their options open, and they made very few changes. They eliminated a couple of small tax credits that had been brought in by their predecessors. Doesn't really affect too much. One of the biggest things, although it's not a big dollar amount, they actually announced, which will affect the real estate industry, is they've given the money to Stats Canada. This is long overdue, in my opinion, to track the housing market. So there's going to be a nationwide database of all properties in Canada, including up-to-date information on purchases and sales, including the degree of foreign ownership, as well as homeowner demographics and financing characteristics. Now, this is the only place and you and I have talked about this in the past, the only places it's available right now is really through real estate industry-related sources, and the current indices that are available all have flaws in them. So this one, they're talking about a very large amount of money. I think $400 million or $240 million, I guess, will be enough, I think, to get our arms around this whole question of what's going on in the real estate industry, and that'll be a very good thing. Although it probably comes too late to do anything about the bubbles that are currently raging in Toronto, but it certainly is better than what we have now.
Well, I believe the problem is the data is being gathered. You have to fill out what they call a FinTrack form, financial tracking, that asks a lot of questions. What kind of money is this? Where is it coming from? What's the nationality of the people providing the money? Are they a security risk to Canada, and so on? Ottawa just hasn't pulled in these forms because they don't have the people to process them. I guess that's what the money's for.
I don't even think the forms have been filed. The people in my industry and in the real estate industry and in the banking industry are all required to fill out these forms based on if they notice anything suspicious, and there's a whole list of suspicious activities. And it doesn't mean that you're accusing them of anything wrong. You're just saying, I noticed this transaction looked a little odd. Here's the transaction, here's the form, and send it off, and then who knows what FinTrack does with it. The other thing that they changed recently, not part of this budget, but in the last 6 months or so, is the requirement that everybody must file a form when they sell a house, whether they qualify for the personal residence exemption from taxation on capital gains or not. So that's going to make a big change to everything. So the federal government, with this budget and with other changes they made, is going to have a lot more information about what's really going on in the housing market. And hopefully it'll be tightening the noose on people that have been avoiding paying tax on some gains, because certainly the rest of us who are paying our taxes feel that you don't like to see people slipping through the cracks, speculating on housing markets and not paying their share. And I think the government had no choice but to move ahead with that. But until they get the data, maybe it's hard for them to be able to collect that. I think they could require, like they do in the investment industry, if you have a stock in an investment account and you sell a stock, there's a form that goes to the CRA, and then the CRA matches that up with whether you send in the form on your income tax to say that you made a capital gain or a loss on that and claimed it, so they can catch you that way. And it would be very easy to do that in the real estate industry. And I'm guessing that that's what this housing statistics framework will be able to do. And it's coming in really quickly. It's they're talking about the fall of 2017, so less than 6 months away, I guess.
Well, it's nice that they plan to take action based on information. The BC government had no statistics to deal with when they brought in the 15% foreign buyer tax. Is it a good idea for governments to finally start working on real information and not just on stories?
Well, the thing about that foreign buyers tax is I'm guessing that they won't collect nearly as much money as they hoped in that. Although I don't know if they hoped to collect money on it or if they just were responding to a political pressure point. But because a lot of the people that are bringing in money from other jurisdictions are able to find a way around that tax by maybe having a local person live there and say that how do you define foreign? There's all kinds of problems with that. So it's although Australia has been doing it for years and they seem to successfully be able to do it, but it is a very complicated topic. And of course, one of the things that could happen, and this is true of all taxation changes, not just this real estate one, but they were talking about there was a rumor that the capital gains tax might be changed. And immediately people said, well, if you do that, people are just going to leave Canada and go to other countries, and it could very well be true with this real estate thing. If they start collecting all the data and they start taxing foreign buyers and they start taxing flippers and all that stuff, we might just find that people move on to another jurisdiction which is more friendly. And my personal opinion is that would be a good thing, but I'm sure there's a lot of people in the real estate industry that wouldn't agree with that. They would feel the other way, that they don't want to lose this activity. It is a huge part of the Canadian GDP. So if we lose that, I'm sure the government's really struggling with it. But I think in the long run it would be much better to have a sane, down to earth housing industry rather than a crazy, bubbly industry built on speculation and flipping and all kinds of other things that are going on.
Well, getting aside from the federal budget, Hilliard, the Toronto Dominion Bank has brought out an economics report. What does it say?
Well, they're talking about, so this is, you and I talked about this last time we talked, the thing I said then was that once Toronto discovers that something exists, then it exists for the first time, right? So the report published March 20th is Toronto housing, the heat is on. It doesn't come right out in the headline and say it's a bubble, but if you read the report, and it's available online from TD Economics, there's no question that it's a bubble. And they also say that in the past, these things have usually ended badly. In fact, they cite several examples, and they don't have a single example that cites where there wasn't at least a fairly significant downturn in house prices. Which, of course, the problem now is there's so much debt against this housing that would create a real problem. But one of the myths that's been going around about Toronto housing, which the TD report punctures, is the idea that there's a lack of supply. So I wrote about this in my weekend note 3 or 4 weeks ago. So housing under construction in the Greater Toronto, the GTA, the Greater Toronto area, has been higher than most other jurisdictions for a long time. Like they've got a chart here that goes back to 1992. It's been higher, and the way they measure it is per 1,000 people. So in Toronto right now, it's 12,000 units per 1,000 people. In the U.S., it peaked out at about 6,000 units, and in Canada overall, it's about 7,000 units right now. So they're building units in Toronto at almost double the rate of the average for Canada, and way more than double the rate for the average in the U.S. even before the bubble burst in the U.S. So there's no way that there's a shortage of supply in Toronto. Now, having said that, it could be that people want something other than what they're building. So that is a problem if they're building the wrong kind of stuff. But the real estate industry claims it's all getting bought. So certainly they seem to be buying. They seem to be selling and building stuff that actually is selling. So I think the better explanation, the easier explanation, the simpler explanation is that it's speculators that are buying these units, and that's why the prices are going up. Not a shortage of supply at all.
And not necessarily foreign buyers either.
No, now the report goes on to talk about exactly that. So they talk about foreign buyers, and it's pretty clear that it is pretty substantial. They're talking about people coming in from other provinces, people coming in from outside of Canada, and they do talk about people leaving Alberta, for example, and moving to Ontario to get in on the economy there, because the economy in Alberta is so poor, and BC is benefiting from that as well. So foreign in the sense of outside of Ontario. But the other thing they highlight is the number of investors, and the investor number that they cite is around 10%, and it's much higher than what people had thought. But I suspect it's a lot higher than that, and the reason that that could be understated is because there's a real advantage in financing through CMHC and the bank and that sort of thing. If you say that you're going to live in the unit that you're buying, and if they know it's a speculator or an investment property, then there's different rules that apply, and you have to have a bigger down payment. So I suspect that if it says it's 10%, either foreign buyers or investors, it's probably higher than that. It's just some people aren't telling the whole story about their situation. Maybe they live in it for a month or two, and then they rent it out. There was another report that came out recently that showed that a huge number of units in Toronto, as soon as they're bought, they're immediately relisted onto onto the rental market, and they showed as many as 10% of them are like that. And the thing that's amazing about that is it's such a poor financial bargain if you try to rent out a condo or a home as a rental. It just you can't just on the income from renting out that property, you can't really make money.
Hilliard, in Vancouver, we've seen single homes come down in price quite dramatically, but I haven't heard a lot of outcry. Is that because the prices went up so much over the last 5 years, you really haven't lost a lot?
Well, I think, it's the other thing that's come down even faster is the number of transactions. So when they say prices have come down, it's on a very small number of transactions because a lot of people are either pulling their house off the market because they don't like the fact that there's no buyer at their price, or they've listed it at a price and they're just sitting waiting to get their price. There's not that desperation that they have to cut the price down. So even though the actual transactions have been lower in terms of price, the amount of activity has really dried up. Now, that the exception to that is in the condo price range, where it's in the the 300,000, 400,000, 500,000 range. There's been a lot of activity, I understand, but in the single-family homes, which is mostly above 1 million in Vancouver and in Toronto, for that matter, the activity has really slowed down. And I don't know if generally people aren't proud of the fact that they're greedy, right? So if people have been greedy and they held out and they were planning to sell and then they waited for the price to go up, because it wasn't that long ago, it's only like maybe a year ago, the prices were still rising at 10 or 15 or 20% a year. So it would make sense for somebody who's a seller to say, well, maybe I'll wait another year and I can get another 20%. And that happened in Toronto, but it didn't work in Vancouver. So when prices started to fall, people don't advertise the fact. They say, oh, I was really stupid. I held on too long and now I can't get my price. I think they just quietly kind of lick their wounds in isolation, and they don't talk about it. So you certainly heard them bragging about how much money they've made on their house before, but you don't hear them talking about the possibility that they might have. It isn't really a loss yet, I would say, except for the people that bought. And the people that bought in 2016, of course, are in a loss position, but everybody else would be still have a big gain. It just might not be the gain that they had talked about. In my book, I talk about that. They call it the anchor price in behavioral economics. And when people get that anchor price in their mind, they say, my house is worth $2 million, and then when they go to sell it and it turns out it's only worth 1.7 or 1.6, that anchor price really looms. It's almost like they're losing money. Even though they're not really losing money, it feels to them like it's a loss. And they may even just decide not to list it and just wait. And, of course, the worst thing they could do is rent it out and try and wait it out. But a lot of people, I think, are doing that. And I see that all over Canada, not just in Vancouver, where people are making that mistake. And it doesn't economically, mathematically make any sense, but it allows people to pretend that maybe they will eventually get that anchor price if they just wait it out.
In Vancouver, there's a huge shortage of rental apartments. That's historic. When I moved here in 1982, there were only 30 apartments for rent in the paper. And, to actually get a place, I waited right at the newspaper printing plant to get the paper when it came off the presses at 4:00 in the morning. And of course, now we don't have printing presses for people to do that with, and everybody does it online. So it's hard to try to get ahead of the market there. One of the concerns they had about raising the capital gains tax is that it would discourage people from building more rental accommodation. Is that true?
Yeah, I don't know if it's connected with that so much directly, but there is a provision in the federal budget to spend. It's called the National Housing Policy, and there's a fair amount of money. I think $1 billion, although it's spread over 10 years, to create new affordable housing. Now, I didn't see the actual details on how they're going to do that, but it certainly is an interesting area. Now, there are actually a fairly large number of places for rent now. If you take into consideration all of the condos that have been bought by investors. Now, some of them they're just sitting empty and they're not necessarily renting them out, but the shortage of rental units is also true in the moderately priced range. But if you're willing to go up above $2,000 or $2,500 a month into the, say, the $3,000 a month range, there's actually a pretty good supply of rental units. And when I talk to people about that, they say, "Oh no, I can't pay that much. That's way too much." But compared to buying, it's a bargain. And I try to explain the math in terms of the difference between buying at 800 or 900,000 and renting at 3,000 a month. And it's a hard thing for people to get their minds around, because we've all been trained to think that the max you'd ever want to pay for rent is 2,000 a month. And sure enough, in Vancouver, if you limit yourself to that price, it's really hard to find a nice place. But if you're willing to go a little bit higher, there are places. And I tell people to be creative. Like I was in, when I was a kid, we grew up in Kerrisdale, and I went down the old Angus Drive was the street we lived on, and I drove down there, and there's, for the first time, I've noticed, this was in mid-March, quite a few for sale signs. So I looked up the prices just for fun, and there was a big 2-story house, I don't know, 4,000 square feet or something. $4 million is what they're asking for that. It's just an incredible amount of money. Now, would they be willing to rent that place for $3,000 or $4,000 a month? Maybe they would. And I would encourage people, if they want to live in a certain area, go and knock on the doors of the places that are for sale. This only works when the market is softening like it is now in Vancouver, and to see if they're willing to rent it for a year or two. And they might decide to do that, pull it off the market because they're not getting their anchor price, and just rent it. And that assumes that you look like you're a nice person or a couple that's not going to wreck the place. It's better if you have a bunch of big dogs, then don't bring them to that interview. But I think there's a lot of properties that are kind of in the informal rental market that people could find quite easily. And in other jurisdictions like Alberta, there's a huge surplus of rental properties, and the rents are coming down really fast, and I wouldn't be surprised to see that happen in other jurisdictions as well.
One thing the Lower Mainland has going for it, though, is the massive influx of people who move here. Toronto, the same thing. Other Canadian cities don't see that. Calgary did 10 years ago. They don't see that now.
No, so Calgary and Edmonton were growing at 2.1 to 2.3% per year for 10 years up until 2016, and the census data just came out. Interestingly enough, Greater Toronto area was less than 1%, so the rate of growth in Alberta was more than double the rate of growth in Toronto. And so that created a shortage. And but it's all been met and then some by new construction. So the supply of housing, and of course now people are leaving Alberta to go back to Toronto or back to Vancouver. Maybe not Vancouver, but maybe other places in BC. So we've got a flow now. I think there's still a slightly positive inflow to Alberta, but we don't have anywhere near the 2% annual growth that we had. And by the way, when that 2.3% annual growth was happening, which would be like 23,000 people a year on 1 million people, there were rumors circulating that 60 and 70,000 people per year were moving to Edmonton and Calgary, and there was no way that was happening, but those rumors were going around and people were buying houses based on that. So when you look at the actual hard data, which we finally got, and the census just came out a couple months ago, it's more like below 1% for Toronto and slightly above 2% for Calgary and Edmonton. And the thing is, that would create a shortage if there was no new building going on, but there's a huge amount of new building. Like I was just saying a minute ago, Toronto is rate of new building in that TD report is huge. It's way above anything that they saw in the U.S. or in other parts of Canada. So we're talking enormous amounts of new housing being built every day, every year. They're adding a huge amount of supply. So it just doesn't add up that there's enough people moving to those areas to create a shortage. You know, the shortage is created by speculative demand. There's people that are buying properties and multiple properties and probably holding them off the market or whatever they're doing, hoping that the price will rise and then they're going to flip them. And certainly in Toronto it's working right now, but for how much longer will it keep working?
Hilliard, thank you so much for being on This Week in Money.
Nice to be on your show again.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, macbethgroup.com.
And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Garth Turner, and Hilliard MacBeth, and stand by for a company showcase update with Jim Pettit, President and CEO of Aben Resources Limited. If you have any questions for This Week in Money, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. We're chatting with Jim Pettit, President and CEO of Aben Resources Limited. Jim, can you tell us a bit about Aben Resources?
Absolutely. Just a quick background on the capital structure, I guess, would be a good place to start. There's 30 million shares out and 50 million fully diluted. It's a gold mining or gold exploration company situated in BC, Saskatchewan, and the Yukon with 3 different projects. The key to each one of these projects is they're in areas that are becoming extremely popular. The first one being the Forest Curve project in the Golden Triangle of British Columbia. We're right in the heart of it and surrounded basically by all the work that's going on up there. There's Eskay Creek and Snip, and got Galore Creek, Copper Canyon, Shaft Creek, Pretium, KSM. They're all around us. And then in Saskatchewan, we've got a project that is just on the southern border of the new Silver Standard property. They've just bought the CP and Santoy mines deposits off of Claude Resources. And that's right on a huge structure that runs north-south through Saskatchewan, and we're just on the southern border, and we've got a project that's virtually drill-ready there as well. And then up in the Yukon, we've got a project I've had there for probably 6 years now, when the Yukon was flying high, and it's situated right next to Golden Predator. They're 3 aces, and part of their property adjoins ours. So there's lots of company, actually extremely good company. And I think when you're out there exploring, you want to have projects that have a fair amount of history behind them. And that's basically what we've got. We've got these projects that have got lots of history. We've had to do data compilations and that sort of thing over the last year on the Saskatchewan and BC properties. The Justin up in the Yukon, we were the original guys up there. We drilled 12 holes way back then and hitting 10 out of 12, and we want to go back up this year and do more.
Who are the people involved in the projects?
Well, my chairman is Ron Nedolinsky, who many people know, especially from his background in the Golden Triangle area. He discovered the Snip mine and was in on Eskay Creek. He actually has another company called Skeena, but he's been the chairman of Aben for several years now, especially since we got active up in the Yukon. Tim Termundi, who also has a company called Eagle Plains. They're a project generator. But he also cut his teeth as a young geologist up in this Golden Triangle area with Ron, actually. And then we've got advisors that are helping the board. Henry Omack, who actually was one of the underlying owners of one of the properties that I've optioned, and Mike Roberts, who's the head geo of one of the properties I've optioned. They've got a huge history. So I think between those 4 guys, I've probably got close to
100 years of experience up in this area.
Where exactly are your projects?
Well, the British Columbia property, Golden Triangle, is in the northwest quadrant of British Columbia, just north of Stewart. Very, very strong historic region for very high-grade developments. You can go way back to the Premier Mine in Grand Duke. They kind of kicked it off, the area out of Stewart, and then as you work your way north, you've got areas now that are, that's the SNP, that's SK, Valley of the Kings area is right there. That's one of the most preeminent exploration areas in the country right now. It equates to what's going on in Quebec as far as money being spent. Saskatchewan, center of Saskatchewan, just south of the Athabasca Basin, is where our Saskatchewan project is. It's called the Chico project. Like I said, that's drill ready. That's an area that's been well known for many years, but relatively underexplored. There hasn't been the amount of attention because people just don't, they don't associate the middle of the prairies to a greenstone belt. But it's a good, strong greenstone belt, and there's a really great deposit there that Silver Standard just paid $340 million for. $340 million. And then you've got up in the Yukon, it's right near the eastern border. I would call it the southeast quadrant of the Yukon, right off the hauling road that runs up. It's the Nahanni Range Road that runs up to Canadian Tungsten. And that's where Golden Predator is also working, and they just raised $17 million to do their summer program. We're going to be looking to do a smaller program than that, but that's the right area.
What does the timing look like?
The timing for these, it's kind of going to be staged. Like, we can't get up into the northwest quadrant of BC in the Golden Triangle. We'll probably start there mid-June. I would think that would be the earliest. And then you've got pretty much a 6-month window of opportunity. So prior to that, Saskatchewan will be starting up an initial IP geophysical survey before we drill, and that should be within 4 weeks. And then that'll be followed by a drill program. The Yukon, again, it'll be, because we're a little bit higher elevation than where Golden Predator is, so I would suggest we'll be waiting till May, maybe into June for that, and then that'll give us another 6-month window of opportunity there.
Jim, is there anything else you'd like to add to today's presentation?
Well, actually there is. I was reading an interesting article in a business, BC Business magazine, or it's a newspaper, and it's about the mining industry and where BC fits into it all right now. And I read something I'd never heard of before, but it states that BC, not Ontario, is the province with the largest significant gold deposits according to an SNL Metals and Mining report last year. This report pegs BC as the richest region in the world for initial gold resources, estimating the province's buried wealth at roughly 3 to 4 times the size of Ontario's. I thought that was incredible.
Of course, too, you're doing business in Canada. We've heard of some tremendous discoveries in Africa recently, but you don't have civil wars popping up every 10 minutes.
No, I don't. I did this on purpose. I've learned over the years. You want to be in mining-friendly areas. Ron Nedolinsky, where he's cut his teeth, is BC, Saskatchewan. And, he sold Brett Resources to Osisko a while back. I sold my Ontario project to New Gold. But this is my first real foray into BC, and I'm actually liking it quite a bit. There's a lot of new infrastructure that wasn't around up in that region, the Golden Triangle, 30 years ago.
Your stock symbol?
Stock symbol is ABN.V.
And it's traded on which platforms?
The TSX and the OTC U.S. markets, ABN.AF.
How can people contact the company?
People can
You go to the website, which is abenresources.com, or they can call 604-687-3376 or 1-800-567-8181 and ask for Don Myers or myself.
Is there an email contact?
You can contact me at jpettit@sentinelmarket.com.
Jim, thank you so much for the update.
You bet.
We were speaking on March 21st. My guest, Jim Pettit, President and CEO of Aben Resources Limited. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of How Street Media Incorporated.